Hey everyone, welcome back to the channel where we break down stocks like we're chatting over coffee about what really matters for long-term investing. Today we're diving deep into UiPath, ticker PATH, a leader in robotic process automation that's evolving fast with AI orchestration. Let's kick things off with a quick market snapshot. PATH has been on a wild ride lately, down about 27% year-to-date amid broader caution around automation plays. Yet the company just posted solid Q1 results that beat on revenue while showing real progress towards sustained profitability. UiPath delivers a full automation ecosystem built around RPA, now supercharged with AI capabilities that help enterprises orchestrate complex business processes. Founded back in 2005 and headquartered in New York, the company serves major clients across banking, healthcare, financial services, and government. With around 3,900 employees and CEO Daniel Dines still at the helm, UiPath sits in the software infrastructure space inside the broader technology sector. On the revenue side, the latest fiscal year broke down nicely across segments. License revenue came in at $606 million net. Subscription services added $954 million as the recurring base keeps expanding, and professional services contributed another $108 million. Geographically, the Americas led with $799 million, followed by EMEA at $528 million and Asia-Pacific at $284 million. That mix shows healthy diversification and growing traction in subscription models that investors love to see. Turning to earnings, fiscal 2026 marked a clear inflection point. Revenue climbed to $1.61 billion with gross profit at $1.34 billion, and the company swung to positive net income of $282 million, or 52 cents per share, after years of losses. EBITDA turned positive at $78 million, reflecting improving operating leverage as AI-driven deals scale. The most recent Q1 showed revenue beating estimates, while the company continued expanding annual recurring revenue through larger enterprise wins. Management commentary from the Q1 call highlighted strong customer engagement around AI orchestration and process automation, with emphasis on how new capabilities are driving larger deal sizes and faster ARR growth. They noted solid progress on profitability while acknowledging the need to keep innovating amid competitive pressures. The tone was constructive, focusing on long-term platform strength rather than short-term noise. Looking at the balance sheet, cash and equivalents sit near $871 million with total current assets over $2.2 billion, giving the company plenty of runway. Total assets reached $3.18 billion against liabilities of $1.1 billion, and stockholders' equity stands at roughly $2.8 billion. Free cash flow for the year came in strong at $352 million, supported by operating cash flow of $371 million. Key ratios look healthy too, with a current ratio above 2.2, gross margins near 83%, and a net profit margin of almost 20% in the latest period. On valuation, PATH trades at a price-to-sales multiple around 3.6 times and a forward PE in the low 20s for the coming years, which feels reasonable for a company transitioning into consistent profitability. The trailing PE sits near 18, but growth investors will want to watch how AI initiatives expand margins further. Strengths include robust revenue growth, expanding ARR from enterprise deals, and a clear AI-driven product roadmap that keeps UiPath competitive. Weaknesses center on still modest scale compared to larger software giants and historical swings between profitability and losses. Opportunities lie in deeper AI orchestration adoption across industries, while threats come from intensifying competition and any slowdown in automation spending. Recent performance tells a mixed story. Over the past week, the stock dropped about 8%, though the one-month return shows a modest 3.5% gain. Longer term, it's been challenging, with 6-month performance down over 42%, and the 5-year return reflecting the broader post-IPO reality for many growth names. The stock has traded between roughly $9.20 and $19.84 over the past year, so volatility remains a factor to watch. For intrinsic value, running a discounted cash flow model with standard assumptions points to a fair value around $7.61 per share. That sits below the current price near $11.17, suggesting the market is pricing in stronger future growth than the base model captures. If AI initiatives accelerate free cash flow beyond current projections, the gap could close quickly, but conservative investors might see limited margin of safety at today's levels. Wrapping up,
MarketSnap brings everything long-term investors use daily into one clean, fast
continues
platform.
to ride
Explore
the AI
stock
automation
financials,
wave.
SWOT
Yet the
analysis, valuation
leaves little room
ratios,
for
5-year
execution
analyst
hiccups.
estimates, and our
It's a
intrinsic
name worth
value
watching
calculator
closely for
built
dips
with real
if you believe
fundamentals,
in the
not
long-term
hype.
story.
All
But
in a layout
always
that's
size
simple to read
positions
and
according to your
ridiculously
risk
fast to
tolerance.
navigate. And when you want to talk investing,
Hit that like
join
button
Nexus,
if this
our
breakdown
community
helped.
where investors
Drop
share
your thoughts on
valuations,
Path in the
posts, and
comments,
stock
and I'll
discussions,
see you in
all
the next
connected
one.
directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.